Welcome to Crypto Money TV, everyone. Hope you guys are having a great day today. And in this video, I'm going to be covering gold and money. And we're going to go over the gold standard article, how it ended 50 years ago. It's a Forbes article. It was published back in January, but I just wanted to cover it because August 15 marks 50 years. So just wanted to share this with you guys and quickly go over this article. So it says here, this year marks the 50th anniversary of the end of the gold standard in the U.S. In August 1971, President Nixon formally unpegged the U.S. dollar from gold, meaning the greenback was no longer convertible into bullion. Overnight, the dollar became a free-floating currency, measurable only by comparing it to other world currencies. And yet, there were still restrictions on private ownership of gold coins, bars, and the like. It wouldn't be until President Ford signed a bill in December 1974 that Americans could freely buy and trade bullion for the first time in over 40 years. A lot happened as a result. Its price no longer fixed. Gold exploded 385% from the end of 74 to 80, when the metal topped out at $850 an ounce as the U.S. coped with historic levels of inflation. So here's a chart showing that over the past 50 years, there's been a growth rate of about 8% starting from 1971 to the end of 2020. And it says here, the ability to trade gold freely has obviously been good for investors. Today, gold bullion is one of the most liquid assets in the world. Its daily volume standing at more than 145 billion, according to the World Gold Council. Only the S&P 500 and U.S. Treasuries trade more, but not by much. So the drawback is that in the years since the end of the gold standard, there's been a significant and growing lack of discipline. When it comes to government spending, before 1971, there was a natural limit to how much money could be printed. New issuances were dependent on the amount of gold sitting in the nation's coffers. Today, with the dollar backed not by hard asset, but by the full faith and credit of the U.S. government, the federal debt is closing in on an astronomical $28 trillion, which is more than 130% of the size of the U.S. economy. And here's another chart showing the total federal debt level in green and the gold price in yellow. So to give you some idea of how dramatically times have changed, federal debt in 1960 was only a little over half the size of the economy. The debt is expected to surge even more in the coming months now. So this article was back in January. So this is old news. And we know that they're continuing to print more money. So it says here, I'm not advocating that we return to the gold standard. It's probably no longer feasible. According to the Treasury Department, official gold reserves currently stand at approximately 261 million ounces for a market value of some 493 billion. That's just not enough metal to support an economy as large as the U.S., not unless the price of each ounce of gold was fixed at something outrageous like 100,000. There's been some discussion of making Bitcoin as a reserve currency. Like gold, its supply is limited. It has the potential to scale up, but at the moment, cryptos are far too volatile. So for now, we're left with the current monetary system of unlimited money printing, which in turn makes each US dollar less valuable and each ounce of gold more valuable. So I really like crypto, but I just wanted to cover this article because I do invest in physical gold and silver and just wanted to share this with you guys. So this goes over MMT, which is modern monetary theory. It says, in short, proponents of MMT say that governments that issue their own currency, as the U.S. does, are free to spend as much as they want, regardless of the amount of revenue generated. And if the government ends up with a spending deficit, it can just print more money to cover the difference. So this is what we're already doing. And in 2020, the federal government spent a total of $6.55 trillion, despite it collecting only $3.42 trillion, about half of that in tax revenue. So what's more, the amount of M1 money supply, which includes most liquid and readily available forms of money, was up an unprecedented 67% in December 2020 compared to the same month the previous year. So as Ray Dalio, billionaire founder of Bridgewater, the world's biggest hedge fund, has said a number of times, cash is trash. I do agree with him on that. But I think it's important to hold some cash because whenever we have bear markets or the market corrects, you always want to be able to have some cash on the sidelines to be able to reinvest into those undervalued assets that you believe in that will outperform as the market corrects. So that's just my take on it. I do like to hold both. I hold some cash, I hold some physical gold, silver, crypto. It's really good to be diversified. But I just wanted to cover this article with you guys because it does have a lot of good, valuable information on it. And I hope you guys enjoyed it. If you guys want to see more content like this, make sure to subscribe, like the video, and let me know in the comments below what you think, whether you agree or disagree. Let me know in the comments below, and I will link this article in the description below. And I'll see you guys on the next one.